So children, now next we proceed to the next adjustment or next level of adjustments, which you will call the adjustment relating to goods. There are these four adjustments that will follow this relating to goods. Remember goods. Now I just told you in the previous adjustment, I explained to you abnormal loss of purchases. Purchases are when the purchases are lost straight away, without even thinking twice, your first reaction should be subtracted from purchases in the trading account. So there, when we give charity in form of goods, children, is a charity. Like I give giving donation in cash, that is you will lose your cash, the cash will be reduced. But suppose you are giving charity, suppose I have a rice seller and somebody comes to ask for charity from me, I will not give cash, I will prefer giving a sack of rice to them. Needy, maybe they're asking for some charity for some langar or some such occasion where charity of my rice will be useful for them. I have given charity. Or maybe I am a clothes dealer, I deal in textile. Somebody, I see a needy, a poor, a helpless poor, so I will like giving donation in the form of that cloth. I will give a dress or something that will be helpful for the needy. So that is charity in form of goods. If business is doing, personally I will not record it anywhere. But if business is doing such charity in form of goods, goods are goods. What are goods means? Those things, those products that were purchased to resell and earn profit. We have recorded when they were piled up, when they were bought to be resold, or when they were manufactured. We had counted them in the list of purchases. Now from those purchases, without selling those purchases and recovering cash for those purchases, if the goods have been given one sack of rice or sack of some grain or some textile or some wood, supposing I'm a furniture dealer, a sofa I give, a chair I give, a table I give, so whatever I'm giving, or some stools or chairs in the poor school for poor or orphanage I give. So those all are charity of those things which otherwise I would have sold. So these are goods. For me, goods always mean purchases. So the accounting treatment for goods, when the goods are lost, the accounting treatment, the first thing is subtracted from purchases. Wherever goods are going, subtracted from purchases. That is the first thing. Secondly, they are given as charity. Charity is a loss to the business. That means it is not recovering cash in any manner. So loss of any type is recorded on the debit side of profit and loss account. So the true treatment, the double treatment for charity in form of goods, minus from purchases and debit of P&L account. Clear? Now next form of transaction relating to goods is when goods are given as free samples. Goods are, what are free samples? For our advertisement, for the popularity of our goods, we give free samples. We give we make small packets of rice, our type of rice, or we make small packets of tea, whatever we sell, maybe grocery. So I am making small samples and I'm giving to retailers or I'm giving to consumers so that they use those small sachets or those small samples and they like and they demand for the same. So that is for advertisement. But then for advertisement, what am I using? I am using my goods. And goods for me are always purchases. So first reaction, wherever goods are being used, whether as charity or as free samples, minus from purchases. And here also the treatment remains the same. They are given as free samples. Free samples are a loss to the business, or they are advertisement. They are as good as advertisement. Advertisement also is an expense to the business. Both ways accounting treatment remains the same. It is debit side of profit and loss account. Clear? So goods given away as charity and goods given away as free samples, both will have similar accounting treatment on both the sides. Next, now the transaction relating to goods is when we make drawings in form of goods. Drawings means now free samples. I told you a sack of rice I'm making, I will give a sack of rice in charity. I will give those small sachets of rice, small packs of rice for advertisement, that is free samples. But for my own household consumption, I'll not go and buy rice from somewhere else. I'll use the rice that have been manufactured in my own rice sheller. So what are those, what is that rice for me? That is a product. Product means goods. Otherwise, if it was not consumed by me or not taken by me and in my household for my consumption, it would have been sold and earned profit. I am using those goods for my personal consumption. Personal consumption means drawings. So it is called drawings in form of goods. Accounting treatment, same. Drawings in goods means minus from purchases. And secondly, drawings are shown as a deduction from capital. If you remember, capital minus drawings plus net profit, so it will be either added to the drawings already given or subtracted from capital as drawings. That is drawings in form of goods. The comprehensive treatment of all these adjustments we'll do when we solve the question, when we do the question. Next important thing, one important term. It is not an adjustment, but it is an important term, children. Implied interest. Implied, what is implied? Simple English meaning of implied means assumed. So it is, see children, whenever I take a loan of rupees 10,000. Will that loan be, and it is written on the in the trial balance, loan taken from IDBI, loan taken from SBI for rupees 10,000. And loan taken at 10,000, can that loan be free of the interest factor? Never. If I take a loan, it is otherwise, if there is no interest on that, it is as good as donation. When it is a loan means there is an interest factor attached to it at 10%. That means loan of 10,000 has been taken at an interest of 10%. That means rupees 1,000 is the interest. Now annual, this is 1,000 per annum. 1,000 per annum, as long as this loan is not returned, is the interest. From this interest, in case I have given rupees 500 has been paid. 500 has to be paid. This is not paid as yet. This will be called the outstanding amount of interest. This is outstanding. And this has been paid. What has been paid is given in the trial balance. Rest, though it is not given in the trial balance, but still it is assumed when it is accompanied that loan has been given at rupees 10,000 at 10% rate, it is assumed 10% of the entire loan amount, the sum that has been taken as liability. It should be 1,000. If something has been given, that is the interest paid, rest out of that. That means this minus this will be the assumed interest or implied interest. This also has to be added in the sum of liability or the loan. Where do we show loan? Implied interest. If no amount of interest is shown in the trial balance, the full amount of interest is shown as interest on the debit side of profit and loss account. Full amount of interest will be shown on the debit side of P&L account. It's a loss. Loan is an expense. So it will be shown as an expense on the debit side of P&L account. This is the P&L account, suppose. On the debit side we show to interest and rupees 1,000. If nothing has been shown in the trial balance. If some amount has been given in the trial balance, if there is some amount that has been paid in the trial balance, if some interest is paid, it is shown in the trial balance, that means the remaining amount then remaining amount becomes outstanding, and it will be given the treatment of outstanding expense. That means, how is outstanding expense treated? It will be added to the interest in the liability side of balance sheet. It will add it to the interest on the liability side of balance sheet, and that outstanding amount of loan is also this. It will also be shown on the debit side of P&L account. It will also be shown as an expense, outstanding expense. All the outstanding expenses are shown on the debit side of P&L account. This will also be shown on the debit side of P&L account. Clear? See children, this is illustration 10 in the textbook. Illustration 10 in the textbook shows this adjustment in the trial balance. On the credit side of trial balance, it is shown loan from Suresh at 12%, and no, it is not, it is given loan from Suresh has been taken at 12% for rupees 10,000. Loan at 12%, 10,000. Loan has been taken at 12% for rupees 10,000. That means interest on this should be 1,200 at 12% on 10,000 should be 1,200. And what is the next line given? Interest on loan from Suresh, same loan, interest on same loan. Debit means expense, it has been paid, rupees 900. 900 has been paid. That means how much is unpaid? At the rate of 12% on 10,000, at the rate of on 10,000, the loan amount is 10,000. At the rate of 12% on this 10,000, how much should be the loan amount? 1,200. And how much has been paid? Rupees 900 has been paid. That means remaining 300 is still outstanding. It is outstanding means it will be shown at two places. Where? Outstanding amount of these other two places where it will be shown, we discuss it. It will be shown as outstanding amount, debit side of P&L account, and added to the loan amount or interest amount on the liability side of balance sheet. See, let us check here now. I'll show you here. See, it is being shown here. To interest on Suresh loan, 900 has been paid, and 300, though they do not say, it is not written there in the trial balance, it is outstanding. There is no mention of outstanding interest, but we know when it is loan is at 12%, the interest paid should be 1,200. If 900 is paid, the remaining amount out of this 1200 is outstanding, or dikhana kitna hai? Total amount will be 1,200 only. And this amount of 300 is outstanding. That means on the liability side of balance sheet, this will be taken as outstanding interest on loan. Loan from Suresh 10,000, interest on loan 300. 900 has been already paid. What has been already paid is already taken at two places. Once in the trial balance and once here in the P&L account. It has been taken here. What has not been taken will be taken again. Interest on unpaid amount, unpaid loan will be given here. 10,300 is the net amount of loan that will be shown. It adds to the amount of loan, or you can say adds to the amount of unpaid interest. That is called the implied interest.